Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. We are starting a bit late today in comparison to our usual time. Now, for today's session, we will be considering a pattern named as a triangle pattern. This is a formation where we see the convergence of the price towards a narrower range. So we get this triangular kind of formation where we can then start looking for a breakout, which we can then utilize to optimize our trade entries. We can utilize this triangle pattern for continuation as well as a reversal setup. So in both these conditions, we can take this formation to look for the profitable trading opportunities. So let us now head to the JForex for the newly released trading platform from the Dukascopy Bank SA. This is the USD JPY chart with each candle period defined at 15 minutes. Today we had the CPI numbers for the United States, and after that we saw this weakening, the softening of US dollars. This is happening across the board, so most of the major currencies have gained against the US dollar. Let us see if we can have any kind of trading opportunities using triangle formation in today's session. So here comes triangle pattern. Now I have added it simply using this quick search option. If you want to know where this indicator, this pattern can be found, then all you have to do is go to this pattern recognition setup, and here you will find it near the bottom of this list. Here comes triangle pattern just below thrust outside bar and above the triple bottom pattern. Now, as I said, the price starts to converge towards a particular price level. That's when this triangle pattern takes shape. So here, if you look at this price formation prior to the release of US CPI, we had the consolidation going on with this price converging just little below 134 around this price level of 133.8. And here, if you had to look for the trading opportunity after this completion of the triangle setup, then this would have worked out as a continuation formation, as we had the uptrend prior to the formation of the triangle, and then we had the move on the higher side. So if you had gone on for the initiation of the trade after this pattern took shape on the chart, you would have been able to go for a buy trade while going for a stop loss little below this immediate swing low, which would have worked out close to this prior swing low of around 133.6 or little below that with a decent enough buffer. So that trade would have kept you in business, and of course it is no one's guess what kind of trade data we might get, so it is better to close the trade positions before the release of a major economic report, as that can cause a sharp spike, and the user stop loss setup might not really work, so it is better to close the trades prior to the release, and that would have saved you in this case. Let us look for some more example. Here there is another symmetrical triangle pattern formation with this price converging towards 133.4, and this time around we get a break on the lower side. This can also be considered as a continuation formation, as we had these declines starting from 133.87, and then these continued to decline for next couple of hours, as we are dealing with the time frame of 15 minutes only. I think this trade also, if you had gone in for initiation of the trade after this breakout, then it would have remained in profit for the next couple of hours, but of course not much profit. It simply remained in a consolidation phase, and eventually it again changed course. This trade also wouldn't have really brought a large amount of money, but I think this also had the potential to bring in some money, and something is better than nothing. That principle you can adopt. Now let us look at this symmetrical triangle formation. In this case, we will have to work it out as a reversal pattern. In the first two instances, we saw the cases of continuation where we saw these price formation continuing its earlier trend. But now let us look for this reversal scenario where the price was moving slightly upward. It is not strongly bullish, but it is just mildly consolidating with a bias on the bullish side. But here, if we see this symmetrical triangle, after that formation, we had this break on the lower side, and here also for next couple of hours, the price remained bearish. And if you had gone for the initiation of the trade, here also some money could have been made while keeping the stop loss with a sharper stop loss as this price level was quite close to the initiation point. The logic of the formation is simple. In case of symmetrical triangle pattern, we see the price converging from both ends. Let us look for more examples. So here you can notice that it started to make lower highs, and also on the lower side the higher lows. So the price started to converge, and then when we get this cross of these two lines drawn for this triangle pattern, then we get a clear cut price level which we have to take into consideration for the breakout, whether we are getting the breakout in the continuation formation or the reversal. We can simply utilize these fresh price moves to look at what is happening then and there, and using the sharp stop loss. The stop loss usually works out very sharp for this formation, as the immediate swing low or swing high is going to be close. In this case, we had this price convergence towards 132.9. Afterwards, we had this break on the higher side with this gap up open after the weekend, and then the price continued to trend upwards for next couple of hours. Here also there was not significant price move on the higher side, but if you had gone for the trade with the stop loss just slightly below, then also the risk reward ratio would have worked out quite favorably. So we saw this another example. Let us increase the time frame to hourly. This triangle pattern can be applied on any time frame of your choice. You can use it for trading intraday, you can use it for swing trading, as well as for investment decisions. And we mainly have three types of triangle patterns: the descending triangle, the symmetrical triangle, and the ascending triangle. Depending on how these lines, the sides of the triangle, are being drawn, most of the formations which we have seen so far on the chart have been of symmetrical triangle, where both these lines are converging towards each other. Of course, that happens in the case of all three, but for ascending triangle, the upper side is nearly horizontal, nearly flat, and for the descending triangle pattern, the lower side is nearly horizontal, and that is not really the case for symmetrical triangle, which are diagonal in nature. Let us look for some ascending or descending triangle formation. That one is also symmetrical, this one is also symmetrical. So here, as I said, the use of this formation is quite easy to understand, and also it is a frequently forming pattern. You don't really have to wait too long. Once in a while, depending on what time frame you are dealing with, what time frame you have applied for the each candle period, you can easily get this triangle pattern recognized on the chart. As I said, we have three types of triangle patterns, so we are looking for some other examples. Apart from the symmetrical triangle pattern, but we are yet to get lucky. Both these formations are of symmetrical triangle only. and I think that is going to take long time. So I would say that you better do it on your own time whenever you have time and you are trying to figure out how to incorporate this system in your trading setup. If you have any existing setup or if you are simply newly designing a setup involving this triangle pattern, you will have to work it out. You will have to experiment and try out various combinations to figure out the optimum trading setup. So here we are dealing with this formation which can be utilized as a continuation as well as a reversal formation, and it gives you a price level after this cross of these two sides of the triangle. So on which side the price is holding after this triangular shape is complete goes a long way in giving you the idea of the trend which is likely to persist for next couple of candle periods. So here we saw this price holding close to the lower side and then it remained bearish. In this case, we saw the price moving on the higher side and it continued to do so for a good amount of time, and that has been the case most of the time. Of course, not all the time you are going to get a profitable trade here. You would have gotten a big trade of almost 300 pips if you had utilized this triangular formation, triangle pattern. In this case also, here we had this break first on the upside and then subsequently on the downside, and in both these scenarios, some amount of profit could have been made. And of course, everything is probabilistic, nothing is certain. You will always have to apply good enough risk management techniques, the trade optimization setups to make sure that if you happen to be on the wrong side of the trade, if the price moves goes against you after you initiate the trade, you should not be losing too much money. So that is always the requirement while dealing with any trading pattern, any trading formation, whether it is triangle pattern or any other formation. So I try to explain to you this triangle pattern in an easy and simple manner. I hope you got the points. And if you have any query or any idea to share, do write to me in the feedback, and I will be more than happy to take the discussion forward. Now, I think it's time to sign off as there is not much we can do in terms of customizing the input parameters for this formation. So the input options, editing of input options have been disabled. There is nothing we can do beside varying the time frame of the candle period candles. So you can go from 1 minute to 1 month depending on which time frame you are trading. Here it is taking some time, maybe the net is slow. All right, I will revert back to the hourly time frame. Okay, so here we had this 5 minute chart, and let's see what happened after this sharp spike which took place after the release of US CPI. After that, even on the lower time frames, we haven't seen any triangle pattern shaping up. So that's all from my side for today's session. If any of you have any points, do write to me in feedback. I'll be back tomorrow with a new pattern to work with. See you next time around. Thank you all for joining in. Goodbye.
Power on. Connected.